What is going on, everybody, and welcome to another weekly update. And what I like to do in these videos is provide you guys some upcoming earnings, some upcoming events to get you prepared for the week ahead. If that sounds like something you're interested in, consider subscribing, as I do also provide a technical analysis on Sundays and a pulse of the market on X at Hemi137. So, before we get kicked off, remember to go ahead and hit the like button and let's dive right in, as there's been some very, very historical events that have occurred over the past week. And we're going to go a deep dive and kind of give an insight into what that may play into in the future. So, with that being said, let's earnings breakdown. Just going to give a high level overview of Palantir and Elf Beauty. I think these two are some of the ones I've been talking about this week. Celsius did have earnings as well. To kind of wrap Celsius and Elf together, Celsius has had a bad rap in general over the past couple of months. They've essentially were tied to, I believe, some chemicals in the drinks were ultimately potentially leading to health problems. I think that was debunked, but nonetheless, these are the kind of times you need to be buying great stocks like this. And Elf is much the same. Their growth rates are still very good, but given the current circumstances, the current economic environment, which is something we talk about all the time, it is bringing down numbers to where they normally are not. And what I mean by that is that typically, their growth rates are very good, but because the consumer has no excess cash, they can't go out and buy these excess things. Again, they are trying to save money to pay for insurance or pay for groceries at this point. And the fact that insurance has been so high lately, every additional dollar has been kind of consumed by insurance. So, with that being said, I do expect them to have a massive bounce back. Alpha is actually doing a lot of spending at this point because what they're trying to do is expand during a downtime. So when the market actually recovers, they will do extremely well. So that is something why I really like Elf moving forward. Celsius is much the same. I do believe they can do very well in the future. Palantir, however, is on the opposite side of that. They are doing extremely well because they continue to expand their scope as far as industries. They've had a lot of major contracts that have come in. These essentially camps they set up to kind of show people what they're really about has really been helping them. And again, they've expanded. They have videos on YouTube about. They did I believe it was during the last Super Bowl. They did kind of an analysis on how their software works, and it is phenomenal. It can essentially be used for anything to amplify essentially the way your business works or security or whatever the case is. You can essentially train that model on whatever you need it to do and optimize your business, which is something that is really good. So again, expecting them to continue to push forward. My only concern with Palantir is that it's been blowing up so much over the past couple months. It really needs to cool off in a lot of senses for me to be a heavy believer that it's going to continue to keep running from this point. I do believe in AI, and I do believe it has one of the best use cases. But again, I think you have to think about scalability, and in the future, yes, it can remain to continue to get more business, but ultimately, I think it's going to kind of stagnate to some extent. I think you still have to remain. They're going to dial back, kind of like Elf has at some point, and like Nvidia will at some point as well, where they're going to kind of relax a little bit, and then their growth rate isn't going to be as high. But as long as they can sustain something like 20-30%, that would be great. That's kind of what I'm expecting could potentially happen, is they might slow down a bit, and then the stock might take a heavy dip after that point once it gets that first earnings where it's not growing quite as rapidly, still doing really well. Like I said, like I mentioned about Alpha all the time, like its growth rates were like 70-80%. and then it dipped down to like 30-40%, which is remarkable because it's still way bigger than a lot of other companies. And then it took a major nosedive, but they are expanding and taking advantage of the current economic environment, which is something I really love. So that was that. Again, there was a lot of earnings. There's a lot of earnings that will continue to play out over the next essentially for the remainder of the quarter. But ultimately, a lot of the big earnings, there's only going to be like ones here and there that I'm really looking at, and it's more so for like a pulse on the market at this point. That kind of gives you an idea where the consumer is at, because these are the same ones we're going to have to watch when the market starts to turn over and starts actually doing better. And I think we still got 6 more months. A lot of the stuff that's essentially been sugar coated and not being reported, I think all that stuff's going to unwind in this new year, and the market's going to have to correct because of that. And something I've been talking about on my daily pulses on X is that we need to rip off the Band-Aid. We need to let this thing naturally heal. It's been essentially pushed, I think, through 4 years when we should have had a major recession during that time, and it's essentially been postponed because we've had massive amounts of spending of $1 trillion over 90 days. And it's getting ridiculous, so bad that we can't even sustain the interest payment on the current debt that we have, which is going to be a huge feat in itself for the new president that is will be in office in January. So that's being said, there is SMCI also did report this week. There's a lot of really interesting fallout going out with SMCI. They got essentially hit for security fraud and for essentially pencil whipping their numbers. And what we saw was that kind of led to a cascading event of what's been going on, and some thesis that I have about why they are pencil whipping numbers to this point, because Nvidia essentially said that they're having a partnership with SMCI. So essentially SMCI it's building the housing units for the GPUs that Nvidia is creating, and so they had to establish that partnership to build out some of these units. I know Elon Musk has bought a bunch of these already. That's essentially done, I think it was like 16 days worth of work, or what should have been 4 years of work in 16 days, just trying to start to establish a neural net to be able to supply AI and AI infrastructure and understand all the resources that takes into account. It's a lot of resources. So even though you may just, a lot of these companies trying to leverage it and not have to pay for all this expensive infrastructure, and maybe just pay a service fee to be able to use the AI. So that's all the kinds of things that are being established as of right now. So with that being said, again, my thesis with this, let me finish this part up by saying NVIDIA and Meta requested security fraud immunity. Now, why is that important? Because there has been some suspicious activity with NVIDIA that's been brought to light, and you could say with Meta, because Meta is one of the leading AI languages in Llama. Why they could also be tied in with this is because if my thesis is correct, I do believe we are in some state of a Cold War with China and Russia. Now, that may change given with the new president that has been elected. But with that being said, there's been a lot of pencil whipping, because essentially during a Cold War, you need to give the perception that you are maybe even way more advanced than you actually are. And so to be able to do that, you may have to pencil whip some numbers in some of these big tech companies to be able to do that. But the problem is it's fraud. And so as we see the fallout with SMCI, and now NVIDIA and Meta are requesting security immunity because of Trump being elected, that could lead to some big problems. But again, you have to understand, again, the military has done this over and over. It's normal for them to do this to try to provide this perspective, but then again, you start crossing lines, right? So that's the problem, is it still is fraud, whether you want to believe that or not. So even though you're trying to give this perspective, so that way you don't give the perspective that you are behind it all, that some other country may have leverage on you. That's the last thing you want. It's just like the race to the moon, whether that was real or not, uh, right? Uh, that's another conspiracy theory, right? But ultimately, understand that you're in that same scenario as of right now. Now, ever since the election has occurred, a lot of things have changed, which leads us into our next point. Trump essentially won by a landslide. Yes, we're not trying to get political here, but you have to understand that whoever is elected essentially establishes policy, and policy needs to be transparent because you need to know what their intentions are, as if they are, because they're serving the people. And I think we all tend to forget that, is they're supposed to serve the people, not themselves. And so, with that being said, this is essentially why Trump is won by a landslide, because a lot of the corruptness that's been going on over the past several years. But ultimately, understand that what is that going to look like moving forward. Now, being said, this is why you're also having Nvidia and Meta seeking security fraud immunity, because of Trump. Trump comes in, he may essentially punish these companies because of what they're doing, even though it may be a military type tactic. Again, it's still fraud. So that's why I think they're seeking security fraud immunity before that happens. So again, there's a hot mess that's unwinding here, and this thing is way deeper than a lot of people um, think it is. And with that being said, we have Trump. What are we going to expect? We have tariffs. Now, tariffs, they don't provide inflation, in my opinion. In the way you have to look at this, it's more of a deflationary type tactic. And you may ask, well, why that is? Because you're essentially increasing prices of all essentially imports that are coming in. And yes, there is that, but what he is attempting to do is trying to push people away from buying goods from other countries, and forcing people to try to open businesses domestically and challenge those foreign entities. And so this is ultimately what the tariffs do. Is it's yeah, prices on again, imports are going to be more expensive, because they're trying to deter you from purchasing those items, and opposed to just creating a new business in the United States, and then essentially selling those products for way cheaper than what we're getting, essentially importing on. So yes, the price will always be pushed off to the consumer. So you can blow it up 200%, and some people will still buy those, but ultimately understand they're trying to deter people from doing that, and building up other countries and trying to build up the U.S. So you have to understand what that is, and that is very deflationary, because the majority of people aren't going to pay the extra $200-300 it costs for products that are being created overseas. So ultimately, what it does is it forces a lot of these companies, say like Toyota, to essentially establish uh, factories here in the U.S. And then that will get rid of some of those tariffs, create more jobs in the U.S. And so you have to understand the full in depth of how tariffs could be beneficial, and actually, because when you're talking about production and GDP is something we've been heavily focused on, because again, right now it's just being propped up by a bunch of government jobs that are regulating, when no actually production is being created. So that's the problem there. So the tariffs will fix that to an extent. And then you're starting to talk about, he's talking a lot about deregulation. We've talked about this quite a bit lately, in how much of an impact that can actually have. So if you get rid of a lot of the deregulation, that causes you to actually expand your growth or grow a lot more rapidly. When you are trying to open a business and there's all these regulations, it deters people from wanting to be creative, to open businesses. And again, you're stunting a lot of growth, that if you removed a lot of that regulation, you'd see massive expansion. And so these are two of the biggest things or policies that Trump will bring. Um, at least that is what he's promised. Now we need to hold everybody accountable, right? And ultimately understand that the deregulation could massively help with that. And this is something we talk about even with the banks. And this how this is going to be a big problem because banks need to be held accountable. All they do is essentially they take your money and leverage it, give you pennies on the dollar, and then ultimately again they're over leveraging it, and if something happens you're the one that really that takes the risk, not them, but they take all the profits. And so if you start making them accountable, then it stops a lot of this fraud and it stops a lot of these things from occurring because you're holding them accountable. So that's essentially what caused the market to rally as much as it has, which I think one of the most historic rallies ever in history in the stock market and in crypto, because of that fact, because of the fact that what he could potentially bring. Now, execution is important, and he's only been in for 3 days. And you're seeing them to starting calling off wars already. You're starting to see a lot of stuff being deterred. Start talking about potentially building out brand new cities, which could bring a lot more production. These are things that he's talking about, which you haven't heard from anybody in a very, very long time. It's like a lost part of America that we weren't building out cities. And why have we stopped that? We need to focus on our infrastructure and building us back out, because again, you have a rapid growing homelessness, especially in the one of the biggest working classes ever in history, and we're depopulating because again it's too expensive, and to be able to do that you need to start producing here in the United States. So all these things that are currently being discussed for this new administration is that it's going to build up the United States. It's not going to be an overnight thing that you just come in office and you sign it and it's fixed. You have to continue to work on it. But if you can set some of these policies, it could be a very golden era. And so you have to look at it in that perspective that it can change things very, very good. But you have to essentially kind of clean out some of the trash. You got to rip off the Band-Aid because, again, the massively overspending that's been going on over the past 2 years for one of the most anticipated recessions that never occurred. This will fix that if, again, he goes in and he starts making changes, which, again, he was just elected a couple of days ago and he's already making massive, massive changes. So these are things that we need to focus on and pay attention to, and could quite substantially do very well. Now, with that being said, we also had an interest rate decision this week. Another 25-point basis move cut, and we potentially got another one scheduled for next month. But again, that was anticipated. We'll see how this is now that Trump has been elected. There's been a lot of swirl and speculation about him and Fed Chair Powell, about how Trump wants to get rid of Powell. He can't just do that. Like, there has to be a very precise reason for that. He can't just do it because he doesn't like them. There has to be a major underlying reason for it, and it has to. Again, it's not someone you can just fire. This is why the Federal Reserve is not a government entity. And so, with that being said, it's put a lot of pressure on Powell, and Powell has been pushing back. Obviously, a lot. He came out after the rate decision was made. And essentially, he was asked multiple times if he's worried or concerned about Trump firing him, and he said no. He said it's by the law that you can't fire him. And I guess it's some law that was established back in 1913 that has created this essentially immunity almost from the president. And you have to understand why this is a big issue, because just in our history in itself, essentially many presidents in our history have been fighting essentially central banks, and understand that, again, they've removed them a couple different times, but it's always been a very tough battle because we see how the debt-based system works. The debt-based system essentially resets the clock and makes the wealthier more wealthy, as you create this poor class and middle class that is almost non-existent at this point because things are just way too expensive. So again, it's the same type of scenario that continues to repeat itself. But there are a lot of things need to change, and so hopefully we'll see what happens. There's a lot of great promise and potentially some good patching, just depending on what happens with policy. And so this is, even though you don't want to be political, you still need to know what the policies are, because it can make a very big change in the environment. And if you can know what can change in the environment, so if this is going to be a very big bullish cycle after the unwinding of what's currently been going on, you have to understand that this is what the truth is on all these things. And so, with that being said, again, it should be quite interesting over the next couple years. But again, I'm still expecting a lot of things to unwind, because you can't continue to spend. Which, I mean, if he comes in and starts deregulating, that can get rid of a lot of wasteful spending. That is one of the big things that they're doing, especially with Elon Musk and bringing him in and trying to make things more efficient. Again, he fired, I think, like 70% of Twitter, and it's still fully functional, operational, automating systems, removing wasteful spending. It can really cut down on a lot of these interest rates. Essentially, this interest rate that we can't even afford, that's even more expensive than our defense budget, which is absolutely absurd. So again, there are things that can be done. And again, I think we're in this, taking the right steps in the right direction, but you're going to have to essentially take small bites off of this thing. It's not going to be something, again, you could just come in and repair overnight. It's going to take many years to transition. And so you want to be able to make sure that, some solid policies are in place to try to establish that. So we'll see how that works moving forward. So this upcoming week, we do have core CPI. Again, not expecting that to go too high. Again, just because they've changed monetary policy isn't going to make a big difference, at least for a couple of months anyway. And then once again, you're starting to see more people get laid off. And that's one thing that we're starting to see with these earnings, is people are getting laid off heavily, continually. And that will continue even much worse in the next couple months, because people are running out of essentially money. And so now they're going to be forced, now that there's a new president elected, people were waiting for the uncertainty to go away. Now people will start putting up homes and everything else at this point. So you can expect things to get a lot worse in that front. The supply of homes to start increasing, which can drive down prices of homes over the next couple months. Now, the housing industry, we've talked about this many times before. It will take many years for it to play out, but the stock market will price in a recession, and then it will correct a lot faster than the housing will. So just keep that in mind. So not really expecting a lot of core inflation to come roaring back at this point. Again, I think we are actually very much in a deflationary state. And the only reason why we're in an inflationary state still at this point is because the government is spending wildly right now. In January, when that slows down and we start cutting a lot of this wasteful spending, that might make it a lot more deflationary. And then we could see some massive deflation at some point early next year, or maybe mid next year, which will obviously create some really rabid numbers that have essentially been hidden and filtered from the public all this time, and the revisions that we've seen. And that all comes unwinding next year, and something we need to pay attention to and take advantage of. So this is why events are big. So Thursday, we do have core PPI. Again, this is more of a just coming out of insights. Again, a lot of the stuff is very lagging. This is why I go more so off of earnings. We do have Powell speaking as well at 3 p.m. Eastern Standard Time on Thursday. And then monetary policies, the next a couple of monetary policies. Again, December will be a big one, because you're going to kind of have projections for that one. January would be a big one. I talk about this one because in 2008, right now we're comparing ourselves with the 2008 financial crisis, because everything is almost verbatim to this point. And now January 2008, they started cutting quite rapidly. There was also an emergency rate cut as well. We'll see if they start panicking around this time again. This will be when Trump starts getting in office. So we'll see what happens, what kind of events are associated around there. I do believe there will be a fallout from Trump being in office. I'm very much certain that that's going to happen. And so, again, there's going to be some sort of fallout from that, but we'll see how that plays out. And then we have core inflation on the 13th of November. So we'll see, which is obviously this week. And then December for the next core. And I'll list after this week, I'll start listing some more core inflations going into the new year. And then upcoming earnings, we got the calendar. We're going to take a look at that. SPX is down near 83. So what we saw last week with 151 points, they were expecting some major fallout, if anything, could occur from the election or essentially from monetary policy. I think a lot of that had to come into Trump winning, and then the 25-point basis move. We'll have to see. I don't think this is all over. I think there will be a lot of backlash. We haven't seen a lot of it right now. There's been a lot of stuff on social media about the disagreement, but nonetheless, what we're looking for is action, which will be more so around January at this point. It's just January will be a very big month, so just be prepared for that. I think we will rally in the back half of the year for the current administration to kind of save face. That will continue to print, that will continue to try to establish some sort of policies to protect against Trump before he actually gets in office. So we'll see what happens there. But only 83, so we're almost back down to normal. Pretty close, but not 151 points like it was last year. Tesla at 30 points. Again, Tesla has been, I think, suppressed because of the uncertainty. If Harris would have come in, there was just a big target on Elon. Even now that Harris isn't obviously knocked out of the race at this point, but now he's still essentially the biggest target being Trump. I think from this point is now shifted to Elon because of free speech. So I think that's what kind of suppressed the Tesla stock. But obviously over the past week, it's exploded since the election. It's well over 300 now. I think that trend will continue. But again, in January, I think it will correct around that point. Like I said, the whole market in general, I think, is going to get a rude awakening of what's been suppressed for about 2 years, and then these policy changes and stuff will start being worked on, and then things will recover rapidly and much more strongly, as ultimately what we're looking for there. So Boeing is at 6, which is a little bit, it's slowing down a little bit more, even despite all the news. So it'll be interesting to see. I think there'll be a lot of fallout with Boeing once the new administration comes in as well. Be something to watch there. JP Morgan is actually a little bit higher this week. You do have a lot of Fed members talking this week. So that is something to keep in mind. It's normally around 4, so it's up a little bit higher than usual. So we'll see what happens there. And that may just be because of the core that is coming out over this next week. So sorry about that. I had to reload the actual calendar. I was looking at an older calendar. So this is the current earnings. Again, we still have some good earnings that will give us more insight into what's actually going on with the market. A lot of these kind of earnings are the earnings we want to be watching when the market actually starts recovering and starts becoming stronger. If a lot of these start doing really well, things will really start exploding from that point. So come on Monday. Monday is a potentially good upcoming company that could be good to watch there. But you are getting into a lot of earnings that really doesn't matter at this point. So this is why I kind of removed the calendar. So maybe by after next week, we'll probably remove the calendar again and wait till the next earnings cycle. Shopify obviously is going to be a huge one this week that I'm really watching. Again, they have a lot of fantastic support, especially for new businesses. I think in the next couple years, Shopify is just going to absolutely explode. Moving forward, Home Depot, obviously, that's going to give you a good sign of when houses start recovering and start doing really well. I expect this to continue to do bad potentially over the next year. I think 2026, what you start to see Home Depot start recovering and potentially doing a lot better there. So over the next year, it might be good to potentially load up on that if that's something you're interested in. But I think we'll see a continued downfall. But again, it goes off of expectations. So if they beat expectations, it'll obviously push up. But again, ultimately, year over year, it's still losing money hand over fist. So that's not a good sign. SoundHound is a very good one for AI moving forward. Obviously, it controls a lot of AI with sound. So that is a major one. I think Nvidia tried to buy them out as well as ARM as well. So that one may do extremely well this week. Spotify has been doing absolutely phenomenal as well. Kava, I think, is a potentially good restaurant, just a healthy restaurant in general, especially with the new administration. This one might do extremely well. I don't know what kind of restrictions may be placed on food. I know they're trying to remove a lot of dyes and stuff, especially with RFK Jr. going in there and taking control of that helm. That may see a dramatic change in a lot of things. The restaurant industry might be interesting to watch in the next couple of years. Oil, gas is, I think, will continue to decline a little bit more. It's kind of stable. They've been trying to prop it up, but ultimately, you are in a recession, so there's not a lot of stuff moving. So I think that a lot of that can change very quite rapidly as well. And then also the EU was talking about potentially buying gas from us as well, as opposed from them buying it from Russia, which could be a very positive for the U.S. as well. So Wednesday, you do have Cisco. Not really watching any of these here. Thursday, pretty big day. You have Disney reporting, which expecting them to continue to get walloped for or at least the next couple months. JD.com. JD.com would be interesting to want to watch there. Advanced auto parts, especially with people hurting. People are doing more work on their vehicles, so that would be interesting to watch. Applied materials, be interesting to watch there as well. Post maybe do very well just because people may be eating a lot more breakfast than normal because again they can't afford much. So we'll see how well they do there. And then we have Baba, which will be a big one on essentially Friday, and seeing how well they recover, because China's been doing a lot of different um, rate cuts, stimulation packages to try to get their economy to bounce back. So it'll be really interesting to see how they play out. They may actually start turning, which again, we have a very lagging effect. So once they start turning, we should see us start turning a couple months after the fact. The fact that they are downfalling right now means we are right on the cusp of ours. And then, but that one will be interesting to watch moving forward, assuming they actually start recovering. They might actually start recovering in the new year. Will we start pricing in a recession before we do our recovery? Could very much align that way. So it'll be interesting to watch there. But like I said, there isn't really much going on here. You're still going to be watching a lot of headlines. There's still some big events going on. I think you are getting into the period of the year where volume starts dying out because you're getting in the holiday season until we start seeing what else happens moving forward. So with all that being said, if you've made it this far, I appreciate you. Go ahead and drop a like. And until the next one, I'll see you guys on the next one. Later.